An interesting note: Level 4 is where most of the millionaires in America come from. The book Millionaire Next Door describes average millionaires as driving a Ford Taurus, owning a company, and living within their means. They study or are informed about investing, have a plan, and invest for long term. They do nothing fancy, risky, or sexy when it comes to investing. They are truly conservative, and their well balanced financial habits are what makes them rich and successful ever long haul. For people who don't like risk and would rather focus on their profession, job, or career instead of spending a lot of time study the subject of investing, level 4 is a must if you want to live a prosperous and financially abundant life. For these individuals, it is even more important to seek the advice of financial planners. They can help you develop your investment strategy and get you started on the right track with long-term investing pattern. This level of investor is patient and uses the advantage of time. If you start early and invest regularly, you can make it phenomenal wealth. If you start late in life, past age 45, this level may not work, especially between now and the year 2010. Level 5: Sophisticated investors. These investors can afford to seek more aggressive or risky investment strategies. Why? Because they have good money habits, a solid foundation of money, and also investment savvy. They are not new to the game. They are focused, not usually diversified. They have a long track record of winning on a consistent basis, and they have had enough losses that given them the wisdom that only come from making mistake and learning from them. These are investors that often buy investment wholesale rather than retail. They put their own deals together for their own use, or they are sophisticated enough to get into deals that their level 6 friends put together that need investment capital. What determines whether people are sophisticated? They have a financial base that is sound from their profession, business, or retirement income, or have a base of solid conservation investments. These people have their personal debt equity ratios in control, which means they have much more income than expenses. They are well educated in the world of investing and actively seek new information. They are cautious yet not cynical, always keeping an open mind. They risk less than 20% of their capital in speculative ventures. They often start small, putting a little money down so they can learn the business of investing, be it stocks, a business acquisition, a real estate syndication, buying foreclosures, etc. If they lost this 20%, it would not damage them or take food off their table. They will look at the loss as a lesson, learn from it, or get back into game to learn more, knowing that failure is a part of process of success. When hating to lose, they are not afraid of losing. Losing inspires them to move forward, to learn, rather than dive into their emotional cave and call their attorney. If people are sophisticated, they can create their own deals with return of 25% to infinity. As mentioned earlier, investors at this level put their own deals together, just as there are someday buy computers right off retailer shelf. There are some people who buy components and create their own customized computer system. Level 5 investors can assemble their investment by bringing different components together. These investors know that bad economic times or market offers them the best opportunities for success. They get into market when others are getting out. They usually know when to get out. At this level, an exit strategy is more important than entry in the market. They are clear on their own principles and their rules of investing. Their vehicles of choice might be real estate, discounted paper, business, bankruptcies, or new issues of stocks. While they take risk greater than average person, they abhor gambling. They have plan and specific goals. They study on daily basis. They read paper, read magazines, subscribe to investment newsletters, and attend investment seminars. They reinvest their gains to build bigger asset base. They know that building a strong asset base that throws off high cash yields or high returns with minimal tax exposure is the path to great long-term wealth. They often teach this information to their children and pass on the family fortune to generations that follow in form of corporations, trust and partnership. They personally own little. Nothing is found in the names of tax purposes as well as protection from Robin Hoods who believe in taking from the rich to give the poor. But although they own nothing, they control everything through corporations. They control the legal entities that own their assets. They have personal board of directors to help them manage their assets. They take advice and learn. This informal board is comprised of a team of bankers, accountants, attorneys, and brokers. They spend a small fortune on solid professional advice, not only to increase their wealth but also protect their wealth from family, friends, lawsuit, and government. Even after they have departed this life, they are still controlling their wealth. These problems are often called steward of money. Even after death, they continue to direct the fate of money they created. Level 6 capitalist. Few people in the world reach this level of investment excellence. In America, less than 1% in 100 is true capitalist. This person is usually an excellent business as well as investor because he or she can create a business and an investment opportunity simultaneously. A capitalist purpose is to make more money by synergistically using other people's money or other people's talent and other people's time. They often are movers and shakers that allow America and other great countries to become great financial powers. They are Kennedys, Rockefellers, Fords, J. Paul's Gettys, and Ross Perot's. It is the capitalists that provide money that create jobs, the business, and the goods that make a country prosper. Level 5 investors generally create investment only for their own portfolio using their own money. True capitalists, on other hand, create investment for themselves and others by using talents and finances of other people. True capitalists create investment and sell them to the market. True capitalists do not need money to make money simply because they know how to use other people's money and other people's time. Level 6 investors create investments that other people buy. They often make other people rich, create jobs, and make things happen. In good economic times, true capitalists do well. In bad economic times, true capitalists get even richer. Capitalists know that economic chaos means new opportunities. They are most often involved early in a project, product, or company or country years before masses find it popular. When you read in a paper about country in trouble or war in a disaster, you can be assured that true capitalist is going in soon or maybe already may be there. A true capitalist is going in while most people are saying stay away, that country or business is in turmoil, it is too risky. Returns of 100% to infinity are expected. That is because they know how to manage risk and how to make money without money.